What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified about the bonus content that we release from time to time, as well as the nightly videos and the weekend video that we release every week. Make sure you follow us on X. We provide real-time entries and updates about real-time updates about our entries for scalps and day trades, as well as mid and long-term trades as well. We do tweet some other things throughout the day that might help traders trade. So go ahead and follow us on X as well. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day, but in the past, as well as where we think price action is going to take us in the future based off of our trading method and our charting method. If you're not familiar with our trading and charting method, I encourage you to stay with us through the video. It's a pretty short video, and in that short amount of time, you should be able to pick up our charting and trading method pretty easily. It is based in the strat. If you're not familiar with the strat, there is a link to a free PDF in our description of this video, as well as a link to Rob Smith's YouTube page. Rob Smith was the inventor of the strat. He passed away a couple of years ago, so he's no longer with us, but his YouTube page is still up and has a wealth of knowledge. You can also research the strat or Rob Smith on the internet. There's plenty of information out there. So three basic things that can happen with a candle. A candle can be a 1, a 2, or a 3, and based off of those numbers of candles, you can have 6 basic reversal patterns, which provide very clear entries and exits. So that's why we like to use the strat. Gives very precise entries and exits, using the numbering pattern as well as broadening formations, which basically to show you where there's a high percentage chance of where price action will go in the future. So go ahead and check that information out if you're not familiar with the strat after this video. Like I said, there's links to free information in the description for this video. Let's look at the agenda for today. We'll go ahead and recap Monday's price action. Then we'll do a quick view of the price action from a broader perspective, the week, the month, the quarter, and the year. Make sure we keep ourselves level set and not too zoomed in on these short time frame charts because of the range that we've been in for the past 9 weeks. So once we look at the wide range view, we'll go ahead and set our 4-hour markers and our triggers and targets for Tuesday, as well as the full week ahead, and just review the triggers and targets for the higher time frame charts as well. So let's go ahead and get into the charts. I know that's what everybody's here for. If you're not familiar with our charting method, again, it is based in the strat, but we do have a color coding system for our broadening formations. It's really simple, but if you look at it from a wide view perspective, there's really not a whole lot of drawing on the chart. There's a single downtrend line from the month perspective, a couple weekly broadening formations, and then where these gaps are on the daily time frame. So not too many things on the chart. A couple main levels: the week, the week flip, the month flip, the quarter flip, and the year flip. As you can see, they've come into play throughout price action over the past 9 weeks. So those are just the main levels, the major levels that we like to keep track of. But again, our charting system is very easy. And if you look in the bonus section of our YouTube page, there is a video called Precision Charting, or Precision Levels, something like that, that you can review that goes deeper into the charting method. So let's no more delay on this video. Let's get into the good stuff. If we're looking at the day chart here, we can see the week did open up here at 27.35. That was the first price that was traded today. Today is the first day of the week, so that is the opening print for the week. Still below the flip for the year, which is this 28.13, which has been resistance over the past 9 weeks. But we are still above the quarter and the month flip, meaning if you look at the upper left-hand part of the chart here, we have our time frame continuity indicators. The day was red, the week was red, but the month and the quarter are green, and again, we're below the year flip still, so the year is red. So you can see why we have this up and down action. We're not, in full time frame continuity to the downside to give us momentum to the downside. We're not in full time frame continuity to the upside to give us momentum to the upside. we've got conflicting time frames showing up here in price action on the chart, right? So we did have an inside day, what we in the strat world call a one, right? A one is where price action does not go above or below previous day's price action. So we know off of a one, we have two reversal opportunities, reversal to the upside, because this is a red one. So we can have a two candle reversal built in with the two to the left of this. So it would be a 2-1-2 reversal entry at the high of today, exiting at the high of Friday, or we can have a reversal to the downside, entering at the low of today, exiting at the low of Friday. If you want to take major profits, or take a big part of your position off the board. But if we do breach the low of Friday, technically that puts us in a 1-2 up combination 2 down. The target being the low of the candle to the left of the one, so that being Wednesday's price action, which is basically the month flip, turning the quarter red and getting close to turning the month red as well. So you could stay in it for a longer play, maybe, like I said, getting rid of some of your position here, half or 3/4 of your position, letting runners run with a extended target of this 2366 as your extended target. But we'll see what price action does tomorrow. We'll see how much momentum price action has tomorrow. Is there anything announced? Do people take risk off the board with Nvidia's earnings on Wednesday? Who knows? We'll see tomorrow. We'll have our triggers and targets ready for both ways. That way we can capitalize either way. Let's take a look at the price action on a smaller time frame, and just look at where you could have got in and out. Just kind of talk about the rules again. So again, our opening print was here at this 27.35. In general, we're looking for lower highs below opening print to enter into puts, targeting overnight low or previous low a day, whichever one comes first, or possibly even the 4-hour trigger to the downside. In this case, if we did get downside action with momentum, the first target, if we got a lower high somewhere right up under the opening print, first target would have been overnight low. Not a lot of magnitude there, so you could have exited if you wanted. If you got really perfect entries and exits and you had a lot of contracts, you could make a little bit of profit there, but that wouldn't have really been worth our while to enter there and exit here. So the next target we would have been looking for first, because previous low a day was so far down below there, last week's 50% does come into play. And if you're not familiar with our channel, go back and look at previous videos, and you can see where last week's 50% comes into play. It's a very major level. So I would say if you don't look at this currently, I would start tracking that. You can even back test it, and you'll see how heavy of a level that can be, especially intraday, not only through the week, but just intraday if you're ever coming into contact with that level. But then if we would have been able to break through that, the next target would have been previous low a day, which of course, if you got below that, would have triggered the day strat, and we will get into that with our triggers and targets, but that would have been a long way to go down. But you can see how it basically caught support at overnight low. Yes, it did go below for a little bit, 5-10, between 10 and 15 minutes it was below overnight low, but that's basically where it caught support. It didn't make a higher low on any major time frames other than, no, it didn't even make it on the hour, because the hour was already in a downtrend. But yeah, so you could have just taken your chances and bought calls when you got the what you thought would have been the bounce off of overnight low. Again, we encountered a little bit of resistance here at the opening print. Once it found its support, we were able to get above, shooting for overnight high. If you follow us on X, we talked about this on our entries and exits where we wanted to exit. But then eventually it did start to put in lower highs and lower lows. So, you exit at that point, getting kind of minimal profit, depending on how many contracts you had and what your entries and exits were. But it did start to form, let's go to the 1 hour. It did start to, not start to form, it continued the downtrend in the sense that we got the lower high here. So we did enter puts at this point. Again, follow us on X and you can see our entries and exits. never did get a higher high or a higher low, especially on the 1 hour time frame. I think on the 15-minute there was, but yeah, we got the lower low. No, it never did make the higher high. So, we were able to, our put stops never got hit. We put it above the higher low on the 1 hour. Let's go here, right? So if you were looking at the 1 hour and you took the lower high here, as soon as price went below this, that locks it, the previous candle. I'm sorry. As soon as price in this candle went below the previous candle's low, that locks this in as a lower high. If you enter there, you can do one of two things. You can either set your stop at where this strat reversal would no longer be enforced, right? So when we're talking about a strat reversal being enforced, that's the 2 up, 2 down. For it to be enforced, the price needs to be below the 2 up. So in the 2 down, it needs to be below that. So you could have put your stop here, saying, if it's no longer enforced, then I don't want to be in the trade. Or you can play it a little bit safer, and you can have a stop up here above the lower high, knowing that it could make a higher low just to make a higher low just to make a lower high and a lower time frame and continue the trend down. That's what we ended up doing. We ended up staying in the puts until I think like 2:57 or 3:57, depending on we're Central Time, so we till 3 minutes left in the day, and we exited. Got decent profits. We had a decent amount of contracts, but it would have been nice to see at least that overnight low before the end of the day, but couldn't get that further pushed down. So we do need to just be aware this is just a soft lower high here, right? Because it was within a 3, so it made a soft lower high, soft lower low. We could see continued momentum to the downside just because of this lower high that was put in here, right? But don't be surprised, because the price action after the lower high was so somewhat muted. Basically, this action was all at the end of the day. It took a long time to kind of grind down. We could see some type of support around this area and going back up. So when we zoom back out, we'll take a look at that. As a matter of fact, let's go ahead and do that now. Let's not waste any more time. Let's look at things from the week perspective, and let's get a more clear chart. So as we remember, we did trigger the 1, 2 up, 2 down last week. We did not reach magnitude. Again, that would be the low of the candle to the left of the 1. So that would have been down here at the gap open. So we do have to keep that in mind. We could continue this pattern because we have not gone too up on this week yet, right? Locking this in as a higher low. Because it's still an inside candle, it could go either way. And it could go try and continue finish out this strat, right? And if it does, we run the risk of also filling this gap, breaking this weekly uptrend line that we've got going here. And at that point, we would have to kind of look at the uptrend line from back in the April 7 drop, and kind of hope that would give you some support if you're a bull. But at the same time, we would know that we're making a lower low here, so we're at the very least creating a broadening formation from a weekly perspective, if not getting ready to set a like a lower high and really lock in a downtrend. Again, we are coming into September, October, which are seasonally the worst performing months for tech. Chips are obviously a part of tech, so you can see that we've got a little bit that we need to keep in mind here. We've got 9 weeks of sideways action ranging in between this 24 basically area, 24 and 28. 28 being the year flip, that would put us back into full time frame continuity to the upside, giving us momentum to kind of go long again, instead of right now where we're doing a lot of day trading, or if we are swinging, we're waiting till we're at the top of this range, 28 area, buying puts with time at the money to ride to the bottom of the range, exit there and look to buy calls on the reversal. So that's been treating us well over the past few weeks. But we've been doing a little bit of day trading and scalping during the day too. So that's really all we have from a week perspective. The month is really the same. We're just moving sideways. Not a lot to look at. We did create a bullish engulfing candle this month. Started out a 2 down in a 2 up, 2 down reversal. So that reversed off the top of this gap basically. So we're still back above this monthly downtrend line that we started back in the end of 2024 and the beginning of 2025. So right now we're still above it, but we're still like competing with this year flip, which again, it's been rejection multiple times throughout the 9 weeks that we've been here. The quarter, we're still in pretty good shape, right? Oops, come on, think so much. We are in the 2 down, 2 up reversal, targeting the high of this candle. So still got work to do, but it is still in force because current price is above the high of last quarter. So that is a positive signal. And if we look at the year, again, we can see why we are in contention from a time frame perspective, because from the year perspective, we triggered the 1, 2 up, 2 down reversal. It almost reached magnitude, but it still does have a little bit more that it can go. The target is the low of the candle to the left of the 1, this being the 1. The low here being 621. We made it to that 23 back in April. And, we didn't quite fulfill the strat, but could we reverse back down, seeing how seasonality is weak over the next couple months? Possibly. We'll see how fast people de-risk here at the end of August. We'll see if people do de-risk here at the end of August. They may not, anticipating the rate cut in September. People might want to just stay positioned wherever they are, not sell anything, and anticipate a jump in the market when or if we get a rate cut in September. So that's everything from a wide view perspective. Let's go ahead and I guess we can look at internals just really quickly. I don't want to waste time here, but we can see here's the price action for SOXL here. We have the tick, we have vol QD, basically money in and money out of the market, and we have ADQD, the breadth. So you can see money did start, flowing, more money going into the market than out of the market in the morning. You could see that in price action. Had the quick tick down below the zero line, but it pushed back up. So you can see that tick down below overnight low, pushed back up, flattened off. Price flattened off, and then it fell off in the afternoon. A little bit conflicting with breadth here, because breadth started out much more negative than volume, money in versus money out. So the money that was going in was very concentrated in certain stocks and not the whole QQQ as a whole. And so you saw the push down with a little bit of push up, but it still remained pretty negative. Negative 650 really being at like the highest it got. And then it pushed down at the end of the day too. So these kind of gave us a little bit more faith in the puts that we were in. The tick never really even got above the zero line. It was negative pretty much all day, bouncing between trend lower zone and zero line. Oops, again, the breadth almost at trend lower zone at open. By the end of the day, it was at trend lower zone. And then vol QD wasn't quite there, but you can see how it was pushing down at the end of the day. So another tool in our tool chest. We did tweet on X about how there was a little bit of disjointed movement between some of the internals, because while the breadth was going down, SOXL was still, this was at the end of its push up still, so it kind of disjointed at that point. But then after it went flat in the afternoon, it did start to kind of catch up at this end of the candle. But even at the end of the day, you can see how breadth pushed down almost to trend lower zone, while it was still kind of just moving sideways and not really pushing down to the end of the day. So again, just another tool in your tool chest that you can use to try and help trade better, give you a little bit more confidence. Again, these are the internals of QQQ and not S&P 500, right? Even though tech is a big part of S&P 500, it doesn't mean chips are. Chips are a big component of QQQ though. So let's go ahead and bring up our triggers and targets for tomorrow. Let's go and bring up the scalp chart, make things a little bigger. So if we're just zoomed in and we're looking for a 4-hour intraday trade, we know that the high of the second 4-hour is what we need to look at, because that will play into the first 4-hour candle that we have tomorrow, right? So we could, because tomorrow, or the second 4-hour candle of today was a 1, again, that gives us 2 opportunities for reversals, right? So we could get the 2, 1, 2 down, triggering at the low of the second 4-hour candle, or the 2, 1, 2 up, triggering at the high of the second 4-hour candle of today. Now, we've got either way could kind of run here, right? So we've got thin structure here from Friday's, Jackson Hole notes where the market just ran up, no real back and forth in here. It's just thin structure. So if we do go 212 down, of course it's triggers here at 27.23. We're targeting 26.81, right? That's our very clear entry, very clear exit. But we can let things run through this thin structure, right? So it could easily be retraced. Then targeting last week's 50%, this 25.99, and then finally the bottom of the thin structure here, the base of this crazy green candle that we had on Friday afternoon. No, that was Friday morning. So we want to go ahead and chart both of these out. We've already got those here in our notes, so we know that on the 4-hour. Well, first, today is tomorrow will be August 26th. There will be 86 trading days left in 2025 tomorrow. Today's close price was 27.30, and we have our flips here, right? So we know the week turns green at 27.35, the month would turn red at 23.57, the quarter would turn red at 24.38, and the year turns green at 28.13. So we know that we've got mixed continuity here, time frame continuity here, so we don't have any real momentum pushing us either way. We have the week's expected move, the market maker's expected move. Again, if you're not familiar with that, check out our weekend video. We show you how you can find that. It is charted on our charts here. You can see the expected move here at the bottom is 24.93, and the top here is 29.97. So we do keep those in mind. Those are major points of inflection. Again, it can go outside of the market maker's expected move. 70% of the time, it usually stays within there. But those are points where you want to kind of, if we get to that point in price action, kind of reassess, is this a possible point of reversal, and watch price action to give you bigger clues. But again, you can go through those expected moves. It does happen with SOXL being a high beta ETF. So aside from that, we do keep note of our gaps, right? So we know where all our gaps are from the top to the bottom, and then we have our triggers and targets below. So in the 4-hour, if we were to trigger to the downside, we would have a failed 2 up, red 1, 2 down, triggering at 27.23, very clear entry, and a very clear exit at 26.81. Now, we do have the extended targets. Oops, that needs to be labeled better. We have our extended targets of 25.34, 24.91, and 23.66. Really, I should throw the 25.99 in there. That would be right here, sorry. 25.99, just because it is last week's 50%. Then we've got the 25.34, which is the low of this candle. And technically, if we were to reach the low of this candle, you could put it together that this is a 1, 2 up, combo 2 down. Oops, let's get rid of that. So this would be a 1, 2 up, and then this candle, this candle, this candle, and then the next candle could combine to be a 2 down, triggering a 1, 2 up, combo 2 down, with the target being the low of this candle being this 24.91. So that's where we get the 24.91 from. I'm not going to put this. There's a lot of extended targets for the 4-hour, and you'll see here how the 4-hour targets and magnitudes really roll into the day, so we don't need to get too many extended targets out there. I got a little happy with the extended targets, but just know that it can kind of turn into a domino effect. That just keeps in mind that we've got the thin structure to the downside, and it could start to run pretty quick. So if we look at the upside, we would have a failed 2 up, down, red 1, 2 up, which could also trigger the 1, 2 down, combo 2 up, right? So we have the 2, 1, 2 up, that if it does reach magnitude and goes above, then we would trigger the 1, 2 down, combo 2 up, targeting the high of the candle to the left of the 1. Again, this is in that free PDF that I have in the description, but that high would be this 28.32. So we have our triggers and targets for tomorrow. If price action goes above 27.56, we're targeting 27.58 first, so that it will trigger the 1, 2 down, combo 2 up, which will give us then a bigger magnitude of 28.32. So very clear entry at 27.56, very clear exit at 28.32, with extended targets of 28.71 and 28.90, right? And you may say those are kind of close, it's only 20 cents apart. But if we look, 20 cents is more than 0.5% in movement for SOXL. So that does offer decent premium movement. We have our higher highs marked and our lower lows marked, just so that we would know that if we do go below or above these, that we are, widening or broadening formation. Just something we want to keep in mind. So if we go to our day chart, let's just stay here. No, actually, let's bring up let's go here. Sorry, wrong chart. That's the same thing. All right, so if we go to the day chart, you can see we'd have the 2, 1, 2 down. All right, again, we're towards the top of the range. It did technically hit it on Friday, so could we just be headed back to the bottom of the range? Possibly. So we'd have the 2 up, 1, 2 down, triggering at the low of today, that 26.81, and targeting the low of Friday, being that 25.34. So we see it triggers at 26.81, which is the magnitude of the 4 hour. So if we trigger the 4 hour and we reach magnitude, that should trigger the day, and that magnitude goes to 25.34, which then triggers the 1, 2 up, combo 2 down, which takes us to 23.66. So very clear entry, very clear exit if you want to unload part of your position, and then another clear exit if you want to unload the rest of your position there, or just another part of your position and let run to the extended targets that we have here. Those extended targets play into the 1, 2 up, combo 2 down, being the low of the candle to the left of the 1, which is this candle, being last month's low, last year's low. That's what these green dashed and white dashed lines are. Also coming into play with last week's low, so that 23.66 area, right? So could very easily see that 20.66 and then just see a reversal here and go back to the top of the range like we've been seeing for the last 9 weeks. So not a lot there extra to report. The concept should be pretty ingrained in your mind if you've watched a few videos, right? It's been the same thing over and over. Top of the range, bottom of the range, bottom of the range, top of the range, right? Where we get a little bit big juicier is when we look at the week. So we zoom out here to the week. Let's get a more clear chart here. All right, so we've got the week here. If we were to trigger it back to the downside, right, that's a 1, 2 up, combo 2 down. If we were to get back to the bottom here, right, so if price action does push us back down, we go below the expected move for the week, we flip the quarter red, we flip the month red, and we're back below this monthly downtrend line, and we break below the bottom of this candle. That re-triggers the 1, 2 up, 2 down, and we're targeting the low of this candle, which is to the left of the 1, and that's 22.57, which puts us at the top of this gap, possibly going to fill this gap. Okay, very simple, very easy, very simple entries and exits. This doesn't have a lot of magnitude, so play it if you want to, but just know that you're at the bottom of the range and you could expect a bounce back to the top. If we do continue back to the upside, that gives us a 2 down, 2 up reversal, triggering at the high of last week and targeting the high of the week before. So it's kind of funny that the market maker's expected move would fall right there, right? There's a reason why that level is a level. So it would trigger at 28.32, which again is out here on our magnitude for the day. So the week would trigger if the day triggers. So it's kind of a domino thing once again, and that brings back in the target of the magnitude of 29.66, which is the high of this candle. But it also brings back in, and this level should be ingrained in your brain as well if you're familiar with the channel, the 30.55, which is the 61.8 fib of the 2020 low to 2021 high. So if we want to visualize that, let's just go ahead and bring up the month chart. Let's go up, bring up the fib, 2020 run up. So if we look at 2020 here, we have the low of 2020, we have the high of 2021, well, really the first week of 2022. But if we draw a Fibonacci between those levels, we see the 61.8 fib, which is a pretty major fib, right? 61.8, the 50, and the 32.8 usually have the heaviest weight. You see that is the 30.55. So that is the reason why we would have an extended target there. And you can see how that level was wicked through but pulled back through as resistance here. It was wicked through and pulled back up that way here as support. A little bit of resistance here, but got through it. It was resistance here, wicked here, wicked here, wicked here before finally breaking through. So with support there, wicked here, support, slight resistance on the way up there. So you can see how it's a major level and why it would be a target. So just going back to our triggers and targets for one last look. Again, I don't want to keep you guys too long. That's really just the end of the video here. I hope you've enjoyed it, but just recapping the triggers and targets. I won't go through them verbally, but just wanted to put it back up on the screen for you. If you're not, sure why these are the triggers and targets, let me know in the comments if I'm going too fast or if you need me to go into something more in depth. Again, there is the free information out there for in the description of this video. Go ahead and check out, download the PDF, and then check out Rob Smith's YouTube page. And there's a very big strat community out there on Twitter as well. It's been around for years. It's nothing new. Not a lot of people, I guess, for whatever reason, know about it, but I'm certainly glad I came across it years and years ago because it allowed me to put in a repeatable strategy that had been proven by Rob. So it was proven by him first as a repeatable strategy. I was able to repeat it. Of course, you layer on your own little nuances with, higher highs and lower lows and things like that that would help you trade specifically, right? But the strat as a base just helps you find a very easy way to read price action. There's not a whole lot of indicators on the charts, and hitting the like button just spreads the word about this trading method, this charting method. Helps spread the word about SOXL, which again I continue to rave about as one of the best pound for pound options to trade out there. It's a very high beta underlying ETF. Wherever you're doing your research, depending on where you do it, it's between 4 and 5 on as far as the beta on the underlying ETF. The options premiums are pretty low, especially when you take into account the high delta to low theta ratio that you get, especially buying at and in the money. So, that's what we prefer to do. We buy at the money, in the money, give ourselves time so theta doesn't eat away at us. Even with scalps and day trades, we always buy 1 week out. Swings, we usually try and give ourselves an extra month of time on when we think the price will actually get to where we think it will get to, add an extra month onto that with our contracts, and it gives you a very safe play that also provides you with a very high profit. So again, just the more people that trade it as well, the more liquid it becomes. So it's a win-win for everybody all around. It's not something that I'm trying to keep to myself. It's not something that's new either. It's been around for years. So I hope everybody enjoyed this video. If you did, give it the thumbs up. Make sure you hit the subscribe button, and I hope you get some good rest tonight. That way you're ready for your trading tomorrow. And I wish everybody good luck tomorrow in tomorrow's trading.